on your screen, you have it. So on your screen, you'll see right now you have the share filter, but if you go to the lecture modules, you've got your lectures, you can go and read up on those lectures. Now, I want to motivate you to start reading a lecture per evening, right? Start working through the material. There's plus minus 38 lectures on the system. That's excluding all the webinars. That's also included on your system. So do make a little bit of time working through this material, but I'm going to touch on the things that we do mention within the lectures. First of all, when we talk about a watch list, we normally say that we want you to create a watch list which consists out of approximately 30 odd shares, right? So it might be a little bit more than 30, it might be a little bit less than 30, but whichever the case may be. Now, the ultimate question is why? Why do we want to create a watch list? What would be the purpose of creating a watch list? Well, first of all, if you're one of those people that says, listen, I don't have enough time, I don't have sufficient knowledge, I just don't have the right tools at this point in time to make this work, then ultimately a watch list is for you. A watch list is there to make your life a lot easier. And the reason for that is because out of all the shares that are listed, and there's approximately plus minus 400 odd shares on the market, and from that 400 odd shares, you want to create a watch list which consists out of no more than 30 odd shares. So obviously you can see by creating a watch list, you're already eliminating a lot of shares. But the only way you can do that is by starting to work with your share filter and the filters that Share Tracking provides to you. And ultimately, one of the main things that we do provide to you as a client of Share Tracking is the winning shares list. Now, the winning shares list is a very delicate list which comprises of out of no more than 100 shares. And out of this winning shares list, you can basically then go and filter for the shares which fall in your specific categories. Now, what is the winning shares list? Well, as I said, it's a list that Share Tracking compiles, which consists out of no more than 100. So obviously, we already eliminated 300 odd shares from the market and saying, listen, these are the ones that we feel have the potential for future growth, right? Now, out of that 100, obviously, you're not going to look at all 100 shares. You're obviously going to boil down to that 30 shares that you want to look at, obviously, for the watch list. Now, as I said, your watch list can consist out of more than 30 shares. It can consist out of less than 30 shares, but as long as you set up a watch list, it would be a wise thing to do. Now, first of all, you'll see in front of you, at this point in time, I don't have a watch list. It's not showing because there's not a watch list button here. Now, normally when you start to create the watch list, there will be a watch list button, and I'm going to show you. If I go to this little green button to the left-hand side, and I click on Add to Watch List, you'll see that as soon as my page reloads, that there's now a green button on my screen. So on this green, you'll see that green button, it now says watch list because I've now added a share to the watch list, okay? And that's the thing that you need to look at and need to understand, that you can then create that watch list. And obviously, if you have your watch list, you can then filter through the 30 shares. If you've got 30 or 35 shares on your list, then you can filter even more to get down to those 2 or 4 shares that fall within your specific category. So that does look to be possible buys for your portfolio. Now, we've covered the amount of shares that Share Tracking says you should have in your watch list, but what is the amount of shares that one should actually have in one's portfolio? Now, studies have shown that the more shares you have and the more diversified you are, the lower risk your portfolio tends to carry. Now, that basically works out because I'm going to give you an example just now of what it means when you buy 8 shares. But a study has been done that shows that if you buy more than 13 shares, if you own more than 13 shares in your portfolio, the risk per share is so minimal that it doesn't even matter if one share completely crashes. The effect is going to be substantially low on your overall portfolio growth at that particular point in time. So what is the amount that we say or recommend that you should look at? Well, when you have the efficient amount of finances to do this, you should probably have approximately 8 different shares in your portfolio. Remember, diversification is the name of the game. Diversification is the name of the game. A lot of people think they are diversified when they buy Absa shares and they buy Capitec shares and they buy Nedbank shares, but you're not diversified because you're still in the financial sector. In the subsector of that financial sector is the banking sector. So obviously you're not diversified because you just completely own banks. And that's not a wise thing to do. Your portfolio should be diversified between financial stocks, consumer goods shares, between industrial shares, and so forth. You want to have that diversification, but only if your capital permits it. A lot of people think they've got they start with, let's say, they have 8,000 Rand and they want to start investing for the first time on the market. Then they read the lecture module. It says that they should own approximately 8 shares in their portfolio, and then they go and buy 1,000 Rands worth of shares in 8 different companies. Now that's not a wise thing to do. What we are saying is, if you start out with your 5,000 or you start out with your 10,000, rather buy 1 or 2 shares with that, let that then grow to a specific amount, sell those shares, and then reinvest the money that you've gained, not only through the profit of those shares, but also through the dividends of those particular stocks. You need to remember and bear this in mind, that the shares that you're buying, you want to make sure that that company pays a good dividend. Dividends are paid out at least twice a year, your interim and finals. Now it's really important to look at those factors as well. Now when we say that you need to own approximately 8 shares in your portfolio, what we're basically saying is we are looking for the top 2% of shares in the market. That's right, you heard me. We're looking for the top 2%. Now you're probably sitting there thinking that's impossible. There's no way that I'm going to be selecting the top 8 shares in the market. Nobody can be that precise in doing that. But that's not what we're aiming for. What we're actually aiming for is to do a proper fundamental and technical analysis of our shares and get those shares that fall within our preferences so that we can buy them and basically then go from there. It's not just about performance, but it's also getting down to the shares that fall within our preferences. Now, you need to remember that some shares have a higher risk than other shares. Now, there's a vast amount of ways you can calculate the volatility of a particular share, and I'm going to show you one method that is available to you on your portfolio or on your system that you can use. But let's just talk a little bit about the 8 shares in your portfolio. So if you own 1 share in your portfolio, that means that 100% of your risk is on that 1 share. But by the time we get to 5 shares, we're already sitting at 20% risk per share. And by the time you get to 8 shares, you're already sitting on 12.5% risk per share. So you can clearly see the more shares you own, okay, the lower the risk per share is going to be. But obviously, the more shares you own, the more time consuming it's going to get, because remember, you're still going to need to be up to speed of what's happening within each and every one of those shares. Now, I covered a lot of the fundamental things now, and a lot of you are sitting in the room ready with your pens because you want to make some notes on things that we are looking for, that we can filter for on the system, right? So if you have your pens ready and you're ready to write down these notes, here we go. So I've got a few ideas that I'm going to share with you that you can look for on your share filter. Now, obviously, there are a lot more things that you can look for, but I just basically want to get you going, push you in a direction, and from there you can just add on from what you read and so forth. I want to say this, and I just want to reiterate this for the last time. The only way you can make a success in the stock market is by increasing your knowledge. It's impossible to make a success on the market without having knowledge. And any person can gain that knowledge because we have the internet and everything in the newspapers, the Business Day, for instance. You've got your DSTV at home. There's a lot of sources of information, and you need to use it to increase your knowledge, because the more knowledge you have, the better selection of stocks you will select, okay? Which means at the end of the day, more profits. So let's look at the ideas. First of all, the first thing that you want to look for is tradability. Now, when I talk about tradability, is I'm actually trying to eliminate those shares that are called or that tends to look thinly traded. Now, how do I know when a share is thinly traded and how can I eliminate it? Well, we use what we call a rule of thumb, and in our lectures we clearly say this as well. That the rule of thumb states that we want to look at the volume or the traded value in rand values that is going through that share on a daily basis. Now, when I talk about the rule of thumb says that at least 3 times the amount that you want to invest needs to move through that share on a daily basis. Now, if you go to your share filter, and remember you've got your share filter, you'll see there's a tab which is called traded value. And in that traded value, what you want to filter for anything trading more than 3 times the amount what you have to invest. Now, if you've got 10,000 Rand and you only want to buy 1 share at this point in time, obviously you're only going to look for shares that is trading above that rule of thumb that we just spoke about. Now, if you've got 10,000, it means that I'm looking for shares trading more than 30,000 Rand, right? Because we're looking at the rule of thumb. The rule of thumb said at least 3 times the amount that you want to invest needs to move through that share on a daily basis. Now, yes, I know there's a lot of you that say, listen, Corné, but I'm conservative. And because I'm conservative, can I move that amount up to, let's say, 100,000 or 200,000? And yes, you can do that. So you put the more than sign, and remember the more than sign is located on your right-hand shift. And you can say, for instance, I'm looking for shares trading more than 100,000 Rand per day. So obviously you're going to eliminate more shares from the list. Now, that's just the first thing that we want to eliminate. We want to eliminate those thinly trading shares. And one reason that I forgot to share about this as well is that you need to bear in mind the reason why we want to eliminate the thinly traded stocks as well is because if you buy a share, you don't want to struggle to get rid of it. That's ultimately the thing about this. If I buy something, I don't want to struggle to get rid of it. So that's another thing what we look for. Now, the second thing is something that a lot of you can relate to, and that's the price of a share. Okay. Now, the price of the share depends on what the amount of money it is that you have available. Now, obviously, if you're going to start out with 10,000 Rand, it's not going to be worth your while to buy a share that's going to cost you 4,000 Rand per share. It's just not worth it. You want to go and look for shares which is a little bit cheaper but still high in value. Now, a lot of people have the idea that high quality blue chip shares are expensive. And that's not true to say, because there's a lot of high quality blue chip shares which is trading below 150 Rand per share and even below 200 Rand per share. And those are high quality shares at low values. They're not costing you 1,000 Rand or 2,000 Rand per share. Yes, there are some of them that's costing you that, but a lot of them is trading below 200 Rand per share. So definitely there is good quality shares out there for you to buy at a really good price. Now the next thing, so the price is how can you filter for that? So obviously, let's say we don't want to buy any share trading trading above 100. So what I'm going to do is I'm going to go to this column that says price EOD. And for those of you wondering what the EOD stands for, it basically just stands for the price at the end of the day. And I'm looking for anything less than 100 Rand. Remember, it's not in cents value, it's in Rand value. It's denoted by the R sign between the parentheses, right? Now, anything below 100 Rand per share. Now, then again, we're sitting with another problem. Some of you might say, but listen, even though I'm looking for high quality blue chip shares that are trading below 100 Rand, I also want to look at shares not trading below 1 Rand per share. So I want to eliminate what we call the penny shares, anything trading below 100 cents or 1 Rand. So how do I do that? So then you can use what we call an in-betweener. So you can go you're looking at all shares trading between 1 Rand to 100 Rand. And that will then basically filter out anything trading below 1 Rand per share or trading more than 100 Rand per share. Now, bear in mind the way that I'm typing this, because this is really important. You need to write 1 space dash space 100. If you do not place any spaces in between the number and the dash, then that will not work. It will not give you an answer for that. Your filter will actually just show you 0 shares, because it's not within the format of that particular filter to do it in that method. So remember, you want to write between 1 rand or whatever it is that you're looking for, between 1 space dash space 100. The third thing that you might want to look at is market capitalization. I know a lot of you only want to focus on high quality blue chip shares. You probably want to look at the mid caps and the top 40. So that's a filter that we've provided to you. You'll see you've got the top 40 shares and the mid cap stocks. Okay, so between these two tabs, you'll see this button over here, the top 40 and the mid caps. That is the top 100 companies based upon market capitalization. Okay, and that will then be displayed to you. You can just simply click on those buttons and then it will take you to the relevant page for those of you that only want to focus on high quality stocks. The next filter that you might want to filter for is the sector group. Now the sector group is the 4th column available to you. Now you probably want to filter between basic materials, consumer goods, consumer services, maybe even the healthcare sector, the technology companies, sorry, my apologies, technology companies and the telecommunications companies, right? You want to filter between them, because we just said in the beginning of this webinar that you want to be diversified. Remember, and you need to make a note, diversification is the name of the game. You need to be diversified in your portfolios. Now the next things that you want to look for is probably going to be your earnings yield, your dividend yield, and your price earnings yield. For those of you making notes, please go and read lecture module number 1 under the technical modules called the 8 relationships. The 8 relationships under the technical modules, technical module number 1. The 8 relationships clearly explains to you the mathematical science behind the earnings yield, the dividend yield, and the price earnings yield, and where those figures are derived from and what they mean. But these things can be used by the investor to determine whether or not the share is in favor or out of favor with the major institutions. So for instance, the dividend yield is something that we use a lot. So we say we are filtering for any share trading more than a 4% dividend yield, because if it has a dividend yield of more than 4%, then it's out of favor with the major institutions. But there's a T's and C's applied to that, because remember, that filter of the dividend yield is only applicable to high quality stocks. So if you want to filter with the dividend yield, and you want to make sure that it is applicable to the stocks that you're looking at, I would refer you to the top 40 tab and the mid-cap stocks, the top 100 shares, because that dividend yield would be applicable to them as well. But the dividend yield is a really good indication to see if a share is out of favor. Now, how do we know that a share is out of favor with the major institutions? Well, quite simple. When a share is trading in the region of a dividend yield of about 5%, so when it's getting close to about 5, then we know it's out of favor with the major institutions. How do we know when it's in favor with the major institutions? Well, when it's trading anything below 2.5%, then we know it's in favor with the major institutions. Now, these things help us to get down to a selection of stocks. Now, the last thing that I want to share with you that you can look at that works is looking at the volatility of the share. Now, let's say, for instance, we want to look at a company, let's say, for instance, we want to look at a company like FirstRand, and we want to see what's the volatility of FirstRand, okay? What you do is you open the chart of FirstRand, and you go to Studies, and you'll see at the top you can filter, and what you're searching for is the beta. B-E-T-A. You just type it in the box that's available to you at the top. Beta. You click on beta. It asks you over what period. You can leave it over a 20-day period. Remember, that's 20 trading days. There's 5 trading days in a week, Monday to Friday, and you basically want to compare it obviously to the financial sector. Now, if you don't know what the financial sector is, the code of the financial sector, obviously you're going to need to get the index code. If you don't know what it is, you can just simply go back to the section. We do provide that to you. You'll see if you go to the subscriber section on your website, you'll see you get a tab which is called the JSE Index Reference. Now, if you go to the JSE Index Reference, you can just filter for financial sector, because obviously FirstRand trades in the financial sector, and what you're actually looking for is the financial stocks, right? Now, what you can do is there's a bunch of financial things that you can look at, but let's say, for instance, you just want to look at the overall financial group, and the overall financial group is the J580. So the J580 or 580. So you take that, you go to your chart, and you put it where it says the comparison symbol to what do you want to compare its share to. I want to compare it to its specific sector group, and I simply click on create. This then gives me an indication that FirstRand currently has a beta value of 1.13. Now, anything more than 1 is seen as being volatile, and anything less than that is then regarded as less volatile. So anything less than 1 is regarded as less volatile. Anything more than 1 is seen as being a little bit more volatile. Now, obviously, the higher the beta value goes above 1, the more volatile the stock is seen, because what the beta value basically tells you is that if the J508, if the financial sector index, the J580, if it goes up, if it moves positively upwards by 1%, FirstRand will jump up by 1.13%. So it will move more than the index. And obviously this means that the share at the end of the day is a little bit more volatile than other normal shares. So let's just look at that list again. Let's just quickly run through that list before we end the session. So for those of you that missed some of them, you're more than welcome to write it down now. Here we go. First of all, we said we look at the tradability of the stock. So you obviously want to go and filter out for those shares that does not conform to the rule of thumb. And remember, we said that the rule of thumb was at least 3 times the amount you want to invest needs to move through that share on a daily basis. The second thing we said we wanted to look at is the share price. So obviously we're not going to go and buy 4,000 or 3,000 rands worth of shares. We're going to look at shares that are trading less than 200 rand per share and so forth if we're starting with a small amount of capital. The third thing that you want to look at is the market capitalization. Remember, we said that if you want to look at the market capitalization of companies, because you only want to look at high quality blue chip shares, then you can filter between the top 40 and the mid cap stocks. The top 40 and the mid caps, and that is available to you on your platform. It is there, you can just click on it. The next thing we said that you want to look at is the share sector group. You want to create a watch list and you want to own different shares in different sector groups because you need to be diversified. Diversification is really, really important in a portfolio. The next thing that we said that you can look at is you can either go, and I said as well, you need to go and read lecture module number 1 under the technical section, and go and read up on the 8 relationships, because you want to look at the dividend yield and the earnings yield and the price earnings yield of companies. The dividend yield is a really good indication if a share is in favor or out of favor with the major institutions. And lastly, we said that you can go and look at the beta value, B-E-T-A, the beta value of a share, because the beta value of a share tells me a little bit about the volatility of the stock. Obviously, anything more than 1 is regarded as being a little bit more volatile. Anything less than 1 is regarded as being less volatile. So you want to bear in mind the volatility of the share as well when buying a specific stock. Now, I hope this afternoon you have a little bit of a better understanding of how you can use the sheriff filter. I've given you a little bit of ideas of things that you can search for on the sheriff filter. There are a lot more things that you can use and that you can gain more knowledge on if you want to and read up on. If you have any questions, you're more than welcome to get a hold of us on the technical support side. You can simply phone us on 012 940 0800. Just that number again, 012 940 0800. You can also reach us on our after hours numbers. It's 082 781 9885. Just that number again, 082 781 9885. From my side, Kunle, thank you very much for joining us for this afternoon session. Remember to register for this whole week's webinars. You've received the email. You can register for all of them. You're more than welcome to do that. And then we'll see you for this whole week up until tomorrow. Bye-bye.